Hey folks, welcome to a product review at Finominal. Today we're going to look at one of the largest actively managed mutual funds in the world, which is the Growth Fund of America. Now, the fund is managed by the Capital Group. It trades under the ticker AGTHX, and it manages an astonishing $269 billion of assets. Now, let's see what makes this fund so successful. And we're going to use the alpha analyzer tool to effectively see what the right benchmark would be. And in this case, the suggestion is the Russell 1000 Growth Index. Now, in case you're wondering why that is the case, so we see over the last 24 years, the R squared of the fund to the Russell 1000 Growth Index was 0.92, which is high, tracking error of 5.9, and a correlation of 0.96. We see the same metrics for the S&P 500, and they're almost identical. So practically speaking, you also could take the S&P 500 as a benchmark. Now, if you compare the performance of the fund to both benchmark indices, we do actually see that it has outperformed both of them, which is great. Now, let's have a quick look in terms of how similar the portfolios are. And what we're going to do is we're going to use IWF, which is a product from iShares that tracks the Russell 1000 Growth Index as a proxy, and going to look at the fund over that. Now, what we do see is that the fund has around 352 holdings, which is quite diversified, versus the index of 444. And there's a large overlap with 161 stocks being in both portfolios. Percentage-wise, that equates to 46%, and that again transforms into a low active share of 54%. And the lower the active share, the less likely, the more difficult it is to outperform the benchmark. So that's actually something that we can evaluate by changing the time period of that track record. And so previously we looked over the period from 2001, where you can see that the fund has outperformed its benchmark. But if we change that to, let's say, 2010, so we still have about 14 years of track record, we see effectively that since then, the fund has quite dramatically underperformed the index. And we can also look at that from a Sharpe ratio perspective. So we can see that the Growth Fund of America has generated a Sharpe of 0.78, but the Russell 1000 Growth Index has done 0.86. So that's concerning because the long-term track record outperformance is great, right? But 14 years is frankly speaking quite long enough, and the delta seems to be increasing. So let's find out what are the potential reasons for that created this underperformance. And we can go back to the alpha analyzer, and we can go to the return-based factor exposure analysis. Now, what we see over here is the factor betas over time. We can see there is slightly positive exposure momentum. There is kind of like flat or flat exposure to the quality factor, to the size factor, but there's also negative exposure to the value factor and the low volatility factor, which is pretty consistent. And that kind of makes sense because it's a growth fund, and growth stocks tend to be volatile and they tend to be expensive. Having said that, if you go to this from an alpha contribution perspective, we can see that especially the negative exposure to the low volatility factor has detracted substantially in performance over the last 10-12 years, simply because during that time the low volatility factor generated mostly positive returns, but the exposure was negative. Now, the other thing worth contemplating is, in case you kind of still like the style of the fund for a reason, is if there is a cheaper product. And for that, we're simply going to use our fee reducer and see if there is a comparable fund that has a similar style but charges less. And what we can see over here is, so the fee reducer is comparing the Growth Fund of America versus this product from Fidelity, which is an all sector equity fund. We can see the Growth Fund of America charges 63 basis points, which is a lot nowadays compared to ETFs or funds that charge zero. And we can see the performance is almost identical. Now, in case you don't like this Fidelity Series All Sector Equity Fund, or you don't have access to it, I suspect this is a product that might only be available to certain Fidelity customers. There's also here another version where you can see another product from Fidelity, a growth fund, which charges 1 basis point. So again, it's significantly cheaper than AGTHX and also is outperformed. So that kind of wraps it up in a sense of having a quick look at the Growth Fund of America, which has a great long-term track record, but it seems to be that most of the outperformance can be attributed to the past rather than the more recent period. And even that includes about 14 years of track record where the fund has underperformed. And it's kind of not surprising because with $269 billion of assets under management, it's just very difficult to do much. You're certainly not nimble. You're restricted to the largest companies. You have to manage your turnover quite carefully, because otherwise you move markets, and that leads to a high market impact cost. And so overall, it seems to be a fund that is a little bit living off its past. And certainly that size, there's just other funds that make more sense from a cost perspective or how they can implement and execute. That's it. Hope that was useful. Have a nice day.